Hi, it's Michael Farr from Farr, Miller and Washington. Stock markets have been moving higher. We're seeing all-time highs, or at least 5-year highs, for the Dow Jones Industrial Average. S&P 500 is moving up. We're seeing lots of good things happening in the market, I think, for probably a lot of very poor reasons. So what's the line from the song? All the right things for all the wrong reasons? That's what we're seeing in the markets, I think, right now. Google is making new highs. Technology's doing well. The bank stocks are doing well. Stockholders, stock owners, stock investors are all feeling pretty good. It's been a very strong year. We see, of course, the tax increases that happened at the beginning of the year have been sort of left on their own island as we still wait and approach sequester here in the next couple of weeks coming on March 1st. There are no discussions in Washington between Republicans and Democrats or Capitol Hill and the White House in terms of any negotiations whatsoever to begin to solve this problem. So definitely, I think, going into sequester, and then we're going to see this sort of grab bag of Capitol Hill activity and certainly White House activity to see who can be the great knight that steps in and saves all of this, saves us from all of this falderall that they've created pretty much by not doing anything anyway. So life in Washington continues to be kind of crazy and frustrating. The Federal Reserve is going to release minutes from their last meeting today. Those are going to be fairly important. They're normally not. I mean, normally kind of boring reading. But I think today they're going to be important because there was some dissension at the December meeting of the Federal Reserve as to whether they should continue this $85 billion a month buying program. I think they're going to continue it, but I want to listen more for that dissension. They're pumping a whole lot of money into the markets. We haven't stopped any of the deficit spending whatsoever. So sequester will put basically an $85 billion a year crimp on federal spending. If the consumer has higher taxes and therefore less money to spend, if the government spends $85 billion less a year, there's less money going in to fuel the economic engine of U.S. gross domestic product. So it's not a really good sign. So you might be asking, as many are, why do stock prices continue to rally in this kind of an environment? My answer is and has been that we're still receiving a whole lot of cash. I would amend that now by saying that investor sentiment is bullish. When investor sentiment is bullish, good news is embraced and bad news is discounted. You come up with a piece of bad news and a worry and a concern, and people say, nah, don't worry about that, Michael. It's really not important. In a bear market, the opposite happens. You can come up with really great news in a bear market, and they'll say, you're just an optimist. You're not being realistic. Forget about it. Things are really bad. We chew and gnaw over those wonderful problems and hang on to them longer than we should. We'll probably hang on to this bull market longer than we should. It will come to an end. It will pass. We will have a correction. We've been over 500 trading days without a market 10% correction. That's not normal, but neither is the Fed coming in and purchasing and keeping interest rates low at the tune of $85 billion a month. Today we saw that housing starts in the U.S., as released by the Commerce Department, fell 8.5%. This is important because the real estate recovery is very, very essential to our overall economic recovery. So housing starts were down. Building permits were up. That was a good thing. They were up slightly. That was a good thing. The producer price index is a number that's like the consumer price index. We measure the cost of goods and services. It's a gauge of inflation, but it's the producer side, the manufacturer side, that group of prices. Usually when you see manufacturers' costs or producers' costs go higher, they typically pass that through to the consumer. Year over year, up around 1.4%, ex-food and energy, excluding food and energy, up 1.8%. well within the Federal Reserve's 2% inflationary guidelines, not a big deal number. Out in the marketplace, we're seeing mergers. Office Max and Office Depot are merging. We're hearing about other merger activity. These are usually bullish economic signs. I've been surprised, frankly, that we haven't seen more of them given the very cheap cost of money. With these kind of low interest rates, corporations can borrow money very cheaply to fund whatever acquisitions they want. Most corporations are doing really big stock buybacks. Yet one last undercurrent that I'm kind of watching in terms of stock prices and what's going on. For the past few years, we've seen bond markets rallying dramatically. We've seen a big shift that's lasted much longer than we thought, people continuing to buy treasuries and municipals and all sorts of bonds, even though the yields aren't very good. The yields on the 10-year treasury are now back over 2%. Never thought I'd actually say that. But now we're back over 2% as money has been leaving some of these bond funds and going into stocks. That transition from bonds to stocks has also been driving share prices higher. And interestingly, it's been a lot of the blue chip stocks that have been receiving that bond money. So safe bond investors are now going ahead and buying some of the blue chip safer stocks, lots of which have high yields. Johnson & Johnson is a AAA company. Its shares have a 3.6% dividend, trading at, 12 or 13 times earnings. Not a particularly expensive stock, certainly not an exciting stock, but you get paid 3.6% as a dividend on a AAA balance sheet where the U.S. Treasury will offer you its bonds for right around 2% for 10 years. That's taxable, of course, and they're a AA credit. Johnson & Johnson has a healthier balance sheet than the United States of America. Never thought I'd have to tell you that either. So for the time being, Mae West said, too much of a good thing can be wonderful. This market's going higher. Enjoy. Don't get too panicked when it corrects, because it will. But really, we need to still find an organic economy that's going to grow and expand and drive corporate growth. Right now, we have an economy, in my opinion, that's being sustained and driven by government money. As long as they print it, this engine runs. I don't think that's sustainable forever, and therefore I do think at some point in the future we see higher interest rates, though it doesn't seem anytime soon, and we will see, I hope at some point, the government pull out of the market and let the private sector take over. My friend Larry Kudlow says, free market capitalism is the best path to prosperity. I agree with Larry. I don't think the government will lead us to a better tomorrow for the economy or for businesses and investments. Hang in there. In Washington, D.C., for Farr, Miller in Washington, I'm Michael Farr.